Welcome, Avorians, to the Saturday forecast for trade week call. My name is Steve Vetterl, sometimes called your risk manager. No, I take that back. I'm always called your risk manager. I'd like to welcome everybody to the weekend, Saturday. Hopefully, everybody's going to a big party tonight. Let's go ahead and get a quick risk disclosure. Guys, see my screen? Can you hear me okay? All right, cool. All right, so here's the deal. Had some changes in the way I'm going to do some of the presentations. So I think what I'm probably going to do, since in all fairness, I have a tendency to drone on, so I'm just going to do these calls real quick. If you guys want to take off, try and get this finished in about 10 minutes. If people got things to do or they're listening to recording, they don't want to stick around for the deeper dive. So let's go into risk disclosure. Trading the foreign exchange markets carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level to complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your own personal investment objectives, level of experience, and risk tolerance. More importantly, can you afford to lose the money? If you're sharing any of the results from any of the new softwares coming out, all of them, please do not use the term company recommended settings. We don't have any recommended settings. AP is not a financial advisory firm. They just license software. They offer fantastic education. There's lots of great coaches, and we are adding 2 coaches and continuing to translate in other languages, which is fantastic. So some software does come with default settings upon initial setup. Have the ability to customize them. I can sort of walk you through that. Occasionally, I'll bring presenters on to bring different points of view. But I think also it's important that the different types of settings, everybody's got sort of their own, hey, my settings are great. And I have people come to me all the time with settings. And we try to vet them out. We try to look at the ones that are the best. But regardless how good the settings are, as of not last week, but the week before, was a great example of why I said, turn off the trading systems. Now, I know probably 80% of our subscribers out there, may or may not have listened to that. I know there's a certain percentage out there that maybe don't follow these calls. Not much I could do for those folks. So if somebody comes to you guys crying that they blew out an account because the currencies went bananas in one particular direction, mostly just a quick reversal on the US dollar, which wreaked havoc in a lot of other currencies. This was not last week. This was the week before. I think it's important to understand that you've got to do the communications to your teams. So with that in mind, let's switch we always start off with the Forex calendar. If I could find the damn thing, I'd go over there. Where is the Forex calendar? Tell you what, let me close out of this window. Let's go into this window. There she blows. All right, here is Forex calendar. Make sure you guys are always checking October 4th through October 10th. Essentially, you're clicking the forward button on Saturday to the next week. I've made a mistake of doing that myself. So what do we know next week? What can we discern from what we see on the screen? Lots of ECB language, right? Lots of Fed speak as well, okay? FOMC minutes. Christine Lagarde, who is a very smart individual, is speaking next week. Governor Bailey from the Bank of England. I mean, basically, everybody's speaking almost every day, with the exception of Monday. So here's my suggestion. For those that do not heed this warning and do lose tons of money, I have no sympathy for it. Don't send me emails. Pay attention to my calls on the weekends, okay? So for all the trading systems on that trade that trade Sunday night through Monday, if you're positive for the week, I'll probably turn it off. Or don't accept trades. It's that simple. I think we're a little bit, again, still fraught with risk. And honestly, guys, if I'm like dead wrong and it's like a great week inside the trading systems and you make money and I'm like totally wrong, That's okay, because the idea is protecting capital, not necessarily going out every week and trying to swing for the fences, right? So just like a major league or any professional baseball pitcher, notice these guys don't pitch every game. In some cases, they'll take an entire week off or more. So then they'll come in and kill it. So I think it'd probably be best after Monday for everybody to kind of keep the powder dry. And for those trading anything Aussie related, you may want to have the thing off the whole week. Okay. Now, for some of the other softwares that we have coming out, in many cases, they take just little teeny weeny trades and sort of mini chip shots instead of trying to drive the whole course. You may not have the need in the future to turn it off every week. But do understand that, if for any of those overseas that didn't understand, our president, Donald Trump, and the First Lady, Melania, have both tested positive for C19. This doesn't mean it's a death sentence. Most people have been getting over this. As a matter of fact, I just met with on Friday an 85-year-old client who, in all fairness, he doesn't really have, the symptoms, asthma, overweight, that kind of thing, diabetes, actually in pretty good shape, but he got C19, and they took him to the doc. They gave him a cocktail of a bunch of stuff. He's out of the hospital in 2 days, playing tennis 2 weeks later. So, I mean, it is possible to recuperate from this. But the point is that it does add volatility to the currency markets. The reason I explain the vast majority of what I do is because it adds volatility to the currency markets. So unless you are a superstar manual trader, I probably would have the systems off next week. It's that simple. Okay. So if you have questions like, hey, Steve, I'm in drawdown, what do I do? It's entirely up to you. What I would suggest is that you tune into my Telegram channel. I have a super deep strategy sheet on, if you're in drawdown, how to turn off stuff, turn things on, leave partial trades on, have it take no new trades. Just please read that Telegram post. It's very good. I had a number of trading experts on our team help build the construction of that piece. So anyway, that's the story. These are the Forex Factory stuff. Let's take a quick look at the markets, and then for those of you who want to split, go for it. So next week, I don't have any crystal ball. So this is the S&P. I always start off with equities. It's what I prefer to do. Then we move to the dollar. They do affect currencies to a lesser degree. Surprisingly enough, if you take a look at the dollar, we had a number of doji days the last couple of days, and essentially October 2nd, which was Friday, Thursday, and Wednesday, for those of you who can't see these, fairly indecisive. I think we had a rally, and then just pulled back, and it was an indecision day. I think the markets are sort of waiting for something. But you've had, again, 3 days to relax, if you will. Notice we see back 3 days, especially when there's 3 dojis in a row. Not too many 3-timers. If you can look back, it's usually a precursor for the next move to happen. And I think if the president's diagnosis goes, if it's, I don't see it happening, but if for some reason it takes a turn for the worse, I think you're going to see some volatility that's going to be hard to control in the currency markets. So a lot of people ask the question, well, if there's unrest in a particular area, why do markets hate it? Okay. Because plain and simple, markets, I don't care what market it is. It could be the art market or the market for classic cars. Markets hate uncertainty. They hate it. They hate it. They hate it. People will sell. Okay. It's that simple. For those of you short, people are selling. Great. You're making money. Betting on the downside. So let's take a look at Euro USD. Now, for those of you guys, Ryan has graced us with his presence today in his all awesome greatness. I don't know which we call you, Ryan. He has posted in the Forex Factory News where the speculators cut net short U.S. dollar bets. I always hesitate staying away from what's called a COT report, which is a commitment of traders, because it is very hard, even for some of us that are in the institutional side of this business. It is very hard to discern those reports. On the surface, when you look at a COT, you're like, hey, it looks like everybody's loaded to the right side of the boat, right? So maybe the right side of the boat is going to sink. And then they go to the other side, long versus short, right? Betting on upside versus downside. So it's tough, but if you guys want, you can start to build your technical education by taking a look at some of the commitment of traders reports. But thank you. And honestly, Jeanette, and a couple of questions I'm getting about that. The developers seem to always be running. So honestly, guys, I'm beginning to just not care what they say they're doing. Okay. I'm making my own decisions on what I'm going to trade or not, right? I'm not basing any of my decisions off of the developers or not. Okay. Just my opinion. I'm slightly breaking from the crowd a little bit. Now, if for some reason everybody comes out Sunday night in mass, right? Let's say all 5 developers of all of our 5 products come out, they're like, we're absolutely not trading next week. Then maybe I need to rethink something, right? But as of right now, it just seems like they're always trading, right? And when you have demo accounts, you don't necessarily have to turn these off. You can continue to run the demo accounts through the craziness, right? This is more of a, hey, let's see what happens. Let's collect more data. There's absolutely nothing wrong with that. But just know that as great as any piece of software is, and I don't care what it trades, if it's trading currency forex, equities, trading some other instrument out there, some exogenistic instrument or some, I should say, exogenistic factor that hits the marketplace. They're going to lose. Because sometimes there's absolutely no way for a software, and it's best to just sit on a bench. So I'm doing this week. So that is the Euro US dollar. Notice we are still essentially back in the bottom edge of our current support. Notice we poked through it for a few days, back up above it. That was the dollar essentially reversing, pushing the euro back up. Now we're sort of stuck in a tight range, which could break precipitously next week. Could be wrong, could do nothing. So GBP USD. So notice the cable bounced after 3 dojis. We had a reversal up. It's typically, if you have some indecision days show up, especially at a big area of support like the 200, which was also arguably darn near the same area where this thing broke out from a cup and handle pattern, right down here, almost a perfect 2700 area. Boom, we bounced. This will probably be resistance. I tell you guys this because if we have some sort of protracted or crazy move one way or the other on this, you'll maybe understand this a little better as far as accepting or not accepting trades from Alexander. Euro JPY. Now, take a look at the weekly chart on this. So I get the question sometimes, why do I get weekly charts? Because you could just see back much further. I have these charts that really, really basic. The ones I actually use to trade have so much stuff on them that most people take a look. I'm like, oh my God, how can you even figure out what's going on? I don't want to do that to you guys. So just keep it real basic. Volume, a moving average or two, candlestick charts. Each one of these candles represents a single day, or in this case, a single week. But it allows us to see where the big support and resistance are. And you can see that, I'll even draw the line here. We can keep this on the chart going forward. It's a pretty big area of support. A little more precise. They're bouncing off support. And if we crash through this and close a couple of candles below this area, which is pretty big, I would not be accepting any long trades. Plain and simple on this one. Okay. Let's take a look at the Euro JPY, my most hated currency. I don't do much in terms of just other than peeking at this. Just taking a quick look at it from a perspective there. The 200 moving average line kept this on a weekly chart It poked above it for a little while. Now it's gone back down below. Let's take a look at a daily on that. So again, notice how we broke out of cup with handle like a lot of these did, honestly. Actually, that's not the best draw. So we could probably drop this down a little bit. Then we broke out of this with a cup with handle. Got down near support. We just pushed down further. Notice we came back up against support. This is where it's much easier from the standpoint of a manual or somebody accepting shorts on Alexander. It's easier to make the decision to accept something like this because we're coming up against something more than likely going to push back down again. GBP NZD, again, just looking at it from the standpoint of a weekly first. 200-day on the weekly has really held this thing most of the summer. I would continue to use that on the weekly chart. Taking a look at the daily, really not as much to be discerned from this chart. All right. Let me take a look at one other thing here. I'm going to switch over to Forex Counter. Somebody wanted to see that again. Bear with me 1 second while I log in here. You guys want to ask questions, just put them in the Q&A window, not the chat window, please. Yeah, we're having some problems with that VPS, so let's just skip past that. Actually, let me go back. I think that VPS will reload. Really have VPS problems. All right, screw it. I'm abandoning ship on this one here because I'm not able to log in. And let me show you guys this instead. I haven't shown this in a couple of weeks. You guys see this okay? It's the 3K high volatility settings. Having some problems showing the other systems. You need to do an F5, right? Right. I show this because this is a great example of the high volatility settings are really beginning to show some love, even though it's been, a pretty brutal week. Well, not last week, but a pretty brutal week the previous week. You guys can see still taking some heat from a profit standpoint to the tune of about $83. But in terms of history, just close out dates on trades, just chipping away. Isn't making a fortune. It did climb out of its hole. Took arguably 2 months. That's actually not bad in the grand scheme of things. Some people, when their equities crashed in 2007, it took them years to get back to flat. But I guess the recent culture of a lot of traders is, what have you done for me lately, right? So with that in mind, at a 3.32% this week, it's actually really good. You guys can see what the performance has been. Some of the brutality that we took with just the volatility in currencies. Arguably, this probably should have been turned off another week or two, but I have had this software off a bunch of times over the summer, and that's why it hasn't really taken the pain that a lot of them have that were even on high volatility settings, but they were just running through some just ridiculous periods of time in the market. So we're up, essentially 6.7%. Worst drawdown in this account. It's just right under 23% in 22. They're 22.86, I guess was the worst, and all in the grand scheme of things over the last 6-7 months, we've seen a lot of these, and I've seen many of these accounts hit their equity protector and just boom, just blew the account because the settings were too high. In most cases, they were way too volatile. I should say they were way too aggressive of settings for the volatility that we experienced in the market. And it was just generally tough. So here's the big account. This account's really starting to show some promise. Again, took some heat, climbed right back out. High volatility settings. This is 0.01 per $3,000 live account denominated in euros. As you can see, we deposited roughly 24.3, took out 3,700. There's 25.6 in the account now. Do note this. Look at that drawdown. I know a lot of you, this is somewhat, just know that in like a fantastic year, this is the return of a tech fund, right? We've gotten this just since May 30th. So put that in the grand scheme of things, right? So there certainly is an argument. Now, granted, this thing is just taking little chips, just chipping away. Now, it is in a bit of drawdown, obviously. But, the key thing is it just hasn't taken big heat. And I would imagine a good chunk of these trades are really not that heavy, except for these two. This was the week that really this account should have been turned off. That's where the biggest heat it is taken. But again, we moved the stops up on this to 500 pips. These are our worst losses inside the account. We're still running, surprisingly to many that has told me, still running damn near high 60s on win rates, which is really good. So I'm proud of how we've done in this account. You guys are wondering what these settings look like. They're all posted on my Telegram channel. I think this link's posted on my Telegram channel too, right? So if you haven't seen this link, I'll put it right here in the chat window. Right. I am not running next week. How do you tell when the software is giving you a short or long? Tiffany's question is, how do you know when the software is giving you a short or long? Here, let me show you this. This is the MT4 platform. To those that don't know what this is, Tiffany, all you have to do is go into the trade window down here at the corner left. Just click on the trade window. You'll see the buys and the sells. Sell, obviously, for short. The channel Melita, I get a lot of people asking me this. This also tells me, guys, you haven't spent enough time in the back office. Shame on you. So the back office, we go right here. I always bookmark everything just because it's really easy to get to. Just go to your account. There's your back office. See that? See the dashboard right here? By the way, the back office for Auvoria Prime is just fantastic. You click on your product. You have your 3 products here. And then you go all the way to the bottom of the page. And it has everything down here. Links to Telegram channels, all of my the training webinars, so forth. We have all of these, which I would suggest watching, but these go all the way back and they're completely archived. But the back office is really good, guys. There's a ton of stuff. This Share Auvoria thing, which is fairly new. I'm sure if you guys have poked around, and this is a really good way to have your contacts be dripped on. There's a couple videos that were just shot. You can see my ugly face in a couple of them. Then you have Auvoria Academy in there. This I highly suggest everybody go through. That I would say probably about 90% of the questions that I've gotten in the last 4 or 5 months was from people who didn't watch this. We can lead a horse to water, but Okay. Just euro, US dollar, and US dollar JPY, correct? I'm not sure what the question is. Somebody asked just euro, US dollar, and US dollar JPY. I think the question was I don't know. You'd have to re-ask it. I don't understand the question. We're running Euro JPY. We're running the 4-ring currency pair. Just not much profit comes off the Euro JPY. Keep in mind, I'm just not a fan of it. But, in all fairness, it did really well last year. So it did just as good as the other 3 currencies. So, I make that statement. I could certainly be wrong. What if it goes on the next 6 months to perform exceptionally well, right? It's all why you have diversification, right? So all those people in 2003 and were like, yeah, let's just go into tech stocks, right? And they did it again in '07, and they just got completely wrecked when the market went down. But tech was so hot. And a lot of people on this call do not know what I'm talking about because this was a while ago. But trust me, guys, these days are coming again. Regardless of what it is, do not put all your eggs in one basket. And at some point, those that do just got absolutely smashed. They didn't have any diversification. Big accounts trading all 3 pairs. Yes. I'm currently running 4 pairs and want to make more profits. Some weeks I could just make enough for the monthly fee. Can I get recommended settings to buff up the properly take more risk plus reward? Okay, so if I'm understanding your question, Anthony, you want to juice up the account. So I would suggest taking a look at variable when it is released in 2 to 3 weeks. Or become more of a manual trader. Set up another account and learn to manually trade. That will help juice up the returns. All right. What else? So the onus is going to be upon you guys. I'll post it on my channel as well. The onus is going to be upon you guys to communicate with your teams that guess what? Steve's not trading next week. Okay. I could be wrong. I don't care because there's too much uncertainty in my opinion right now. So let your hearts not be troubled. 1031. I am off the mic. I wish everybody a good week of not trading. But if you are trading and manually trading, hey, all the more power to you. I wish you guys the best. Got any questions? svetteral at avoriaprime.com. May the trades be with you.